My name is Philip Williams. I'm the CEO of IsoEnergy. We're a diversified uranium explorer and developer with projects in the top uranium jurisdictions in the world: Canada, the United States, and Australia.
Good to see you, Mr. Williams. Obviously, lots of you. We were down at your site, Tony M, down in Utah, and talked to the team, Marty and the boys and girls. Excellent, but what I wasn't there, the timing wasn't quite right. You've gone and picked up the Schittering Mill and Anfield along the way. Why did you do that?
Yeah, look, I think it would have been very obvious when you were down there. The Schittering Canyon Mill is 4 miles from Tony M. In fact, the projects were originally built together back in the 80s, and ore from Tony M went to Schittering Canyon. And up until announcing this acquisition, our plan with Tony M was to truck that ore to the White Mesa Mill about 127 miles away. Now we only have to go 4 miles. So on top of the mill, Anfield has a really excellent portfolio of resources, past producing mines, permitted projects in the United States that are extremely complementary with the rest of our projects in the United States.
Right, obviously it makes total sense that the proximity is obvious for all to see. Why is it better in your hands than theirs?
Look, I think scale matters in this business, and access to capital matters in this business, and the capex to move these projects ahead, I think, was just slightly out of the reach of a company the size of Anfield. And together, the operational synergies, the MPV pickup for us, particularly on transport, make it so compelling that we can much more easily finance it than I think Anfield could have separately.
Right, and talk to me about the timing. Obviously, that mill's been sitting there a while. You picked up Tony M just around the corner. Is the timing work for both?
Well, which timing are you talking about? The timing of the deal. We're working towards having the transaction itself closed by the end of December. In terms of development of the projects in the mill, the Anfield guys have done an excellent job in terms of filing the requisite paperwork with the authorities to permit the mill to go back into operational status. There's still some time to get there, so that application was complete in July. And we think it's another 12 to 18 months from there to get that status confirmed and have the ability to turn the mill back on. So that's the kind of timeline. And of course, there's a lot of work that's going to go on in the background in terms of detailing what's required to put the mill back up and running, and all the long lead time items, et cetera, that we're going to need to purchase along the way.
Right, okay. And so is there sort of sense of what the mill's capacity is and what you're going to be able to do in terms of scaling that if you need to?
Yeah, look, so right now the capacity, we talk about in two different numbers. One is 750 tons per day, so that's how much ore the mill can process on a daily basis. And then there's a licensed capacity of how much uranium it can produce on an annual basis, and right now that's 1 million pounds. As part of the application that Anfield did, they're looking to expand both of those numbers. The first number will go from 750 to 1,000 tons per day, and the second number will be licensed at up to 3 million pounds of annual production capacity.
Right, and okay, I know you've got to do the work, etc., but you guys must have a sort of sense of how quickly you want to get this thing up and running. I think for you, the money shouldn't be an issue, but what's the work that's needed to be done between now and working out how quickly this thing gets into production? Yeah,
look, we want to move things ahead rapidly, although I'll caveat that with market conditions. So and we're probably very much like you, and I'm sure we're going to talk about this in a few minutes in terms of our outlook. We think prices are going much higher, and so really what our goal here is to have as many options for near-term production in the United States as we can in the fastest period of time, be ready. So the first work stream really is taking all of the information for all of our projects and putting them into comprehensive resource engineering feasibility studies around the restart. We think that's going to take us till the middle of next year, and then it'll be making decisions of which aspects to move forward at what pace, and that relates both to the mill and to the individual mines themselves.
Right, and that's specifically about this part of your portfolio. You've got a kind of much broader portfolio, and as you reference, you have to take a view on what the thematic's going to do for you, what pricing is going to do for you. Does this kind of cover off the kind of blend of portfolio that you want to see across the broader company, or is there more to come? Because there's a lot of work involved in getting this side of things moving, isn't there?
Yeah, no, for sure. I mean, look, we are massively constructive on the uranium space. And so we'll always be looking for opportunistic ways to build the portfolio, especially where they're as complementary as what we're doing here. But we've got a lot on our plate, particularly with this, it's a big portfolio now that we have in the United States. So that's going to keep us busy for a period of time. But again, just with our view and our outlook, and quite frankly, our team and our capacity, we would certainly be open to other opportunities, but we need to do some digesting first, in my opinion.
Right. Okay. But again, just so sort of kind of drill down a little bit on this one, but we've seen the likes of like UEC and Denison kind of build up kind of big portfolios through acquisition for the last 5 years, and some other kind of cute stuff going in there. You're relatively, well, the building blocks to get you to where you are now, I think, are well understood, but you're relatively new in the sense of the new version of IsoEnergy has got some time on its hands. It's for investors, they're looking to see what you want to become, what they are investing into, and the order of play. Because being a producer is clearly a big part of this story for you. Having that badge, producer badge, is important to you. So have you kind of worked out the order of play given how you read the market at the moment?
Yeah, I mean, the order of play is really focused on the United States. What we see between our combined portfolios is 2 to 2.5 million pounds of annual production capacity, and that comes out of Shooter and Canyon, of course, and the associated projects in the Henry Mountains, which are very close to Shooter and Canyon. And then we have this portfolio of projects further to the east in the Lisbon Valley Uravan district, again, which could, taken together, could get us to that level. And then as we look further out in time, of course, that's where Canada comes in. Our Hurricane project, is a longer term development story, but I think that really works out well for our portfolio. It's near term production in the United States, focus our mining energies there, and then layer in Canada over time.
Right, so money, cash generation. It's great having access to cash to be able to make these acquisitions, do the M&A, and that suggests a bit of growth. But at some point, some of the bigger companies, and you're getting to be one of the bigger companies now, need to kind of, put their flag in the sand and say, we will get into production. This does that for you. How do you think the market should interpret that ambition?
Well, look, I think, when we look at our U.S. portfolio, and I think when the markets looked at it, it's been interesting, and we're very happy with the assets that we have in Utah today. These are past producing mines that were in production in the last cycle. They can make money at the prices of uranium that we think are going to come in the near term. The Anfield acquisition puts us to a new level, and this really puts us on the playing field with the peer group that we always think we should be a part of, which is the Energies, the Encores, the Energy Fuels, and even the UECs of the world. But I think where we see, what we've got a job to do as management is articulate that story to the market, so they also put us in that category. Because if they do, there's a tremendous re-rating, we think, for the company just on that, just becoming sort of comparable to those peers in terms of valuations.
Right, but sticking with the kind of the US component, you said we're going to focus on the US. Is that just because of the US utilities and their buying behavior for, I guess, homegrown product, or is there more to it than that?
Look, that's certainly part of it, and it won't surprise you that we're getting a lot of inbound calls for access to our pounds. But I think why we're focused particularly on the U.S. is the near-term nature of what we have. When you have mines that were in production in the past, and you were down in Tony M, and you can, I've watched the video, tremendous in showing the infrastructure that's there. What we're talking about in these mines are fully built mines, no capex, no additional large capex in front of us. So, when you compare those projects to other projects, either in our portfolio or in other companies that require tens of millions of dollars to build, it's a marked difference and a significant advantage to us. So we're focused there because, yes, the U.S. is going to be a strategic place where utilities in the U.S. and other Western utilities want to get material from, but also because the nature of our projects mean that we can be in production very quickly. And when prices move dramatically, as we think they're going to, we can be delivering pounds into that market and making cash flow for our business to fund some of the other opportunities.
Right. Okay. And we talk with some of the greats in the space, people like John Borshoff, always gets a good listening, and gives a good listening too. He talks about lack of kind of skill sets in the sector. I had the pleasure of meeting your team down there. It's quite clear they know what they're doing, but with all of this new additional purchasing, they're going to need to get out there and do some more hiring by the looks of it. Is there enough skill set in the US to get after?
Look, the truth is not right now. So that is going to be a big part of the push going forward in terms of identifying and bringing on board the requisite skill set to move these projects ahead. I'm hoping that what you saw when you met our team is extremely competent people that we brought from other industries. There's uranium experience, but there's also guys who just have mining experience and geology experience. We're going to have to do a bit of that is draw from outside of our sector. I think hopefully, again, what you saw when you spoke to some of our team is that they were attracted to this opportunity. In fact, Josh Cleland, who you would have met, our mine manager, he moved his entire family from Alaska to come and work at this project, and it was, one part just looking for something new to do, but the second part being, wow, look at what your company's doing here. I want to be part of that. And we're looking for those kinds of people who have who see our vision and share it and want to be part of the organization. And so far, we've been able to attract very strong people on that basis. I think we're going to continue to be successful, but there's a lot of work to do to make sure that we are staffing up the right way with the right people to execute on these opportunities.
Right, and so how do you kind of manage that balance between walk before you run and all of these opportunities? Bizarrely, there's still a lot of cash-strapped companies in the sector who don't have access to capital, don't have access to cheap capital, and will have the same sorts of issues in terms of staffing up accordingly. What's the balance for you? Because in M&A terms, it's a field day out there, but you don't want to, like I say, you don't want to run before you walk.
Yeah, no, you're entirely right. I mean, look, first of all, I think there's going to be more M&A in the space, particularly in the U.S. You can see the landscapes. I mean, go look at our presentation and see the project locations of the Anfield projects and our locations. There's so many synergies to be had, and because of where they're located, and there's more of that I think is going to happen in the space. And then in terms of the smaller companies you mentioned, increasingly they're going to be coming and knocking on our door, and then we can be picky, and we can be sure that not only does it make sense, the industrial logic of what we're doing, but that we can handle it with the team and the resources that we have.
Right. Okay. So you said you got a lot of inbound coming in, obviously with these moves recently, but in the US specifically. More broadly, how are you seeing the market in terms of these generalist funds who've been looking in? They got excited at the beginning of the year. It's been sort of, we're sort of sitting back at the moment. What's going to get things going? Because I'm not sure. I've got the stomach for hearing the same story I've heard for the last 5 years. If it's going to be WNA, it's going to be the next conference or whatever. What, in your mind, what's truly going to move this thing forward?
Yeah, look, I mean, I wish I knew the answer to that, Matt. I'm in the same camp. I mean, I think that I know where it's going, what's going to take it there. I didn't know it was going to be 3 Mile Island. I mean, you and I were sitting at WNA this year, and it felt dire in a way when you look. And by the way, just completely disconnected the equity markets to what we were seeing, the fundamentals for the space. And then fast forward a couple of weeks, and it's completely different look and feel, because day after day, positive news from this space in terms of, whether it's 3 Mile Island, whether it's data centers requiring nuclear power, all of these things are real. The problem is there's a little bit of a disconnect in terms of timing, right? When the announcements of nuclear power are going to take a while to work through the system, versus what's going to move the spot price tomorrow, which is sometimes the way equity investors are looking at things. But it's going to happen. And I watched an interesting presentation from one of the leading market pricing organizations, and the disconnect between supply and demand, even in the bearish scenario, there's a structural deficit every year from now till kingdom come if we don't get new production going, and that the new production is only going to come online because of higher prices. So the price is going to have to go there. But what's going to be the catalyst? It's going to be something that I can't say today, but it's going to happen.
Yeah, I think for us, we kind of feel it's like it's layers, like a lasagna, I guess, like layers and layers of this puzzle. I don't think it's any one thing. That it's clearly shown the last 5 years. It's never any one thing. Just layers upon layers building up to that. So tension is, I guess, irrepressible.
Well, 100%. And Matt, I was just to add to that, I was reading some news sources today, and someone had stacked up all of the mines that have announced production delays or production reductions, and it's at least half a dozen projects are either pushed out in time or aren't producing at the rates that were expected. Layers, it's happening, but what's the sort of top layer that's gonna actually unlock the spot price? Again, not sure.
Not sure. Well, I think it's going to be. I think that last point here is really, really important, and and I guess another point to sort of builds on that would be the fact that quite a few of the companies, promising the pounds will come out of the ground, won't be able to deliver those pounds out of the ground. So I think the tensions there. I think the thematic is well understood. But let's move on. So we're in violent agreement about it's a coming, and it's coming, but it's a kind of it's an accretive growth rather than looking for some massive step change, which I think is great. Great for business, normal businesses anyway. Can we just talk about some of the plays that you're seeing out there in the market at the moment? There's this whole conversation around Western access to Africa, pounds on the ground. We've got people like Global perhaps struggling to get the money out of North America. Does that mean that the money's going to potentially come out of the east, and that China specifically? What's that do for supply from Niger? What's it do for supply out of Namibia? And then what does that do for Western supply or Western focused companies?
Yeah, I mean, I think you nailed it on the head. The east is going to be taking on some of these higher risk jurisdictions, and those pounds are going to go that direction. And so as we're talking to investors and utilities, they're looking for sources of supply in the Western countries. Again, that's why we built our company around Canada, the US, and Australia. We're attractive. Those are great mining jurisdictions. There's rule of law. We know what we own. There's permitting can take a longer, but quite frankly, we're okay with that because we know what we have. We know what the process looks like. And I think that utilities and investors alike are going to flock to companies that are focused in those countries, and those pounds are required. They're needed. They need to come out of the ground, and the buyers need them ultimately.
And do you think ultimately with the North American kind of market, sorry to go a bit macro here, but the North American market will work together, like Canada, US will work together? Because we're looking at, say, for instance, Aussie company Paladin looking to make that acquisition of Fission, and the Canadian government stepped in and said, well, let's have a look at, does this meet our standards? Is this good for Canada? Is that the kind of messaging that needs to be signaled to the market, or is that perhaps sow some doubt about some of those more global M&A activities?
Yeah, I mean, listen, I was probably as dumbfounded by that as the next guy in terms of why there's a reticence to have an Australian company come in and purchase a Canadian company. We've seen the Canadian government particularly come out and block investments. Mostly we've seen in the lithium space, but mostly it's with state-owned entities in some quasi less desirable jurisdictions. So I'm not really sure what's behind this, but I think that stuff like that just calls in the sector is risky, and so Fission and Paladin, the tie-up, I thought was a tremendous idea because it makes a bigger company that can more easily finance the development of Patterson Lake. If it's a standalone, that becomes harder again. So then what happens? Is that supply also now pushed out in duration? Again, just more constructive for the space because it's just hard.
I think it'll be hard as a standalone because that's potentially quite a big capex ask. I think. Right, retail markets. You said there's been a slight across multiple metals, across precious metals included, unless you're a producer. There's been a little bit of disinterest. Do you think that's ever going to come back, or companies going to have to look to alternative financing? You guys seem to have kind of skipped a few stages because of your institutional kind of shareholders. Your register is very institutional. Your access to capital is very institutional. For the slightly smaller companies, and this comes back to potential M&A, for earlier stage developers, for explorers, are they going to need alternative financing, and is that good for the sector?
Yeah, listen, I think so, but I think the retail investor is going to come back to this space, and a few anecdotal points. We've hosted a conference call for the transaction, and there was over 200 people on that call. So that's largely retail investors. I think the challenge with uranium and it relates to institutions as well, is we've had a lot of false starts. And so when people have piled in and been burned a couple of times, and so it may take us getting back over $100, seeing the equities move before they all come back. But when they do, I think they come back with a vengeance. In terms of alternative sources of capital, I mean, I think we're seeing a little bit of that already in some of the smaller names. But what we're not seeing traditional equity financing that's really start up yet, even though the names have sort of come up from their lows. So it's tricky, And again, one of the strategies that we've always had is being bigger, being more liquid, is going to get us lower cost of capital, better access to capital. To that end, one of the things we're considering pursuing post this transaction is a U.S. listing. We think that will appeal to there's a lot of generalist investors in the U.S. that we're starting to talk to. But that's a big part of the business plan, is you have to think about that side of your business, not just, hey, I've got these great assets. It's how do you get the story out? Where are the best exchanges to list on? How do you attract investors such that you can make sure that you have access and keep the cost of capital as low as possible?
Right, and with regards to kind of moving forward for you, obviously you're potentially, once this deal's concluded, you've got your own mill, one of only 3 licensed mills in the US potentially, but it maybe puts an end the partnership or the arrangement with an access to energy fuels. Do you think you've now reached a side where you're not looking for that type of relationship anymore, or are you keeping the door open?
Oh no, keeping the door open. I mean, we think that in fact this transaction provides more opportunities to collaborate with Energy Fuels than less, and we maintain a very close relationship with those guys, and certainly when you look at the map of our projects and their mill and our mill, there's a lot of smart things that can be done collaboratively between the two groups. So if anything, I think this is a way to even get closer with those guys and be mutually beneficial. I mean, just one small example is Energy Fuels has a great project in the Henry Mountains called Bullfrog, over 10 million pounds of uranium that sits 5 miles away from the Shootaring Canyon mill. That's something maybe we can collaborate on, and then we have some projects that are closer to their mill. Again, something we can collaborate on. Those conversations still to be had, but I look forward to working with those guys even closer going forward.
Okay, well, cause for optimism about that and the market. So appreciate your time today. We will look forward to the next announcement, whatever that may be.
Yeah, great talking to you, Matt.